Next question. Elaborate the features of GST and analyze its performance. So it has two components. First component is elaborating the features of GST, and the second component is analyzing the performance of the GST. Now what is GST? GST is nothing but the indirect tax. Previously, before GST, there used to be multiple indirect taxes. Okay, there were indirect taxes levied by the central government, there were indirect taxes levied by the state government. There used to be, like, say, excise tax, VAT tax, sales tax, octroi tax, entry tax. So like this, there used to be multiple taxes. These taxes, multiple taxes, used to create confusion also. Okay, so now all those taxes were removed and applied only one tax. Okay, that is called the GST. Okay, so this is the actual concept of the GST. So GST is a simply, you have to understand, it is a kind of indirect tax reform. Okay, with an objective introduced with an objective of simplifying the indirect tax regime and increase the ease of doing business. Simple introduction, yet effective introduction. Now GST is an VAT. Now what is this? We have seen multiple taxes clubbed. Okay, the 18 taxes, somewhat it has once in the UPSC they have asked to list down those 18 taxes also. Once you can go through those things. Okay, the 18 taxes has been clubbed and introduced as a simply GST. Okay, now we will try to understand what is this VAT, what is this destination based tax, all those concepts we will try to understand. So now try to understand the concept of the GST. So previously, what was the scenario is, let's say there is a kind of some raw material. Okay, let's say there is some kind of wheat is there. Okay, from that wheat, that is which is costing me 100 rupees. From the wheat, okay, it has went to, okay, some kind of manufacturing process, and it has become a kind of cake. Okay, from here again that cake has been some raw cake has become a kind of pastry or chocolate cake. Okay, so which was initially a raw material here 100 rupees, and then it has traveled the entire supply chain from 100, 200 and 300. Previously, what used to happen is there used to be multiple taxes. Okay, here 5 rupees of excise tax, 2 rupees of central tax, sales tax, or else then octroi tax, 1 rupee. Okay, I'm saying in terms of the rupee, it would be a kind of percentages used to create the multiple kind of confusions. So government now says there is only one GST. That GST 50-50 share, center 50%, state 50%. Okay, that is called as a CGST and SGST. This is one kind of reform that has all the taxes, all the indirect taxes, majority of the indirect taxes clubbed into the one single tax called the GST. Now another thing in this is what was the situation of tax regime during that time period was, let's say now let's assume simply there is a 10% of the tax. Now I'm applying 10% of the tax here. Okay, so what is the 10% of the 100 rupees? It is a 10 rupees. Now again here 10% I will apply. So what is the 10% of the 200 rupees? It is 20. Then again 10% of the 300 rupees is 30. Then the final amount will be 60 rupees. This is the earlier scenario. Okay, now if you observe this person, he is paying tax on his 200 rupees. Here he has already he is using this input of 100 rupees on which tax is already paid by this guy, right? He is actually paying again extra tax. Same with this person, he is already paying tax to the product which already paid by this thing and this thing. Now GST is a value added tax, means the person who is producing, he will only pay tax on the value addition done by him. What is the value addition value? Okay, you can arrive at the value addition from the subtracting final value minus the initial value. If the final value is 200, then initial value is 100 rupees, then his value added is 100 rupees. Now on this 100 rupees, you have to pay the 10% tax. Now if the GST is 10%, now it means 10% on the 100 rupees. Okay, then here what happens is, now firstly this person will pay 10% on the 200 rupees. Okay, so it will come to the 20 rupees. But then he will file the input tax credit on the raw material on the 100 rupees. Okay, he has already paid the tax, that he will show as a input tax credit, for which he already paid the tax, and input tax credit 10 rupees he will get back. So he is actually paying only 10 rupees on the value addition he has done. So here same way, now here, now let's say there is a 10% of the GST. First he will pay on the 300 rupees. 300 on the 300 rupees, okay, he will pay 30 rupees of the GST. Okay, then what happens is he will file the input tax credit. On the input tax credit, he said, okay, already on the two, I have a value added for only 100 rupees, that is 300 minus 200. Only 100 rupees. On that 100 rupees only I should pay the tax, which is the 10 rupees. He will say he has already paid for this 200 rupees. He will file the input tax credit. He will get his 20 rupees back. This is called the input tax credit mechanism. So now if you add the actual tax that is happening here, that is 10 rupees plus 10 rupees plus 10 rupees. It is equal to 30 rupees. Here in this case, it is a 60 rupees. So what is happening? Two things if you can observe. One thing is simplification has happened. Second thing is cascading effect has been removed, right? So because of this thing, cost for the final consumer will be reduced. When the cost is reduced, demand will be increased, more purchases will be happened, right? This is the first important major benefit. Okay, more demand, then more GDP, more production. So it will create some kind of positive loop. Okay, now such kind of cascading effect, multiple taxation is removed, then business people will be more interested to invest, right? Simplification of the tax laws has happened, so that will increase the ease of doing business. That is one more added benefit of this this thing. Now if you observe, okay, now this person this thing is going through this entire supply chain. Now if this person has to get his input tax credit of 20 rupees, he has to get bill from him. Only then he can show to the government that I have already paid tax on this 200 rupees of 20 rupees, you give it back to me. So he will ask bill from this particular person. So because of this thing, what is happening when you have to generate the bill, formalization of your economy is happening. Okay, so that's the reason your economy will turn from the informal economy to the formal economy. Now this thing will also, when there is more formalization, digitalization, your tax base will naturally increase. There will be more GDP, similarly tax returns, revenues to the government, which is nothing but the tax buoyancy. Tax buoyancy means changes in the tax revenue with respect to the changes in the GDP. So tax buoyancy will increase because now they have to pay the bill. So the other advantage is formalization is happening, tax to GDP is increasing, tax buoyancy is increasing, more digitalization is happening. These are the benefits. Now let's assume they are till here. Okay, this is happening in the one state. Okay, let's say that till here it is happening in the Andhra Pradesh. Okay, from here the market good has been entered into the Telangana. So what happens is when the good enter from the Andhra Pradesh to the Telangana government, so here instead of the GST, IGST will be applied. Same value of the 10%. This IGST will be, because good is moving from one state to another state, it will cause confusion. So IGST will be applied. Central government will collect it and give it to the destination area. Okay, it will give it to the Telangana. That is how it is a destination based tax. Destination based tax means where actually consumption is happening, there you have to pay the tax. So whoever the government, whichever the state where actually sale of that particular product is happening, there you will get the tax. So what happens with this? This will also help in the balanced regional development. Most of the Indian states that are manufacturing states are already developed. Okay, the consumption states are those states where actually development is not happening. So they will get more tax returns and they will get the more money. So this will benefit and also it will helpful in the balanced regional development. This is the one more benefit of the GST. Now here you have to understand one more thing. Now anyway, like I have told you, the cost saving is happening. Instead of 60 rupees, because of the reduction of the cascading effect, the cost of product, the tax has come down from 60 to 30 rupees. Now cost should also be reduced, right? Now let's say this person is not allowing to transfer that reduced price to the consumer. Okay, see, if the taxes are coming down, whoever the final consumer, for him the final cost also should come down, right? The benefit should be transferred, but it may or it may not happen. So the government for that has created the anti-profiteering authority. Earlier, some national anti-profiting authority, a central government body created by manned by the bureaucracy was created, but now that body has been abolished and the powers have been given to the Competition Commission of India. This is a very recent current affair. Okay, it is important for your prelims also. Now why such thing is to ensure that the price transfer, okay, reduction of the prices transfer to the consumer. But this is seen as some kind of anti-business. Okay, the business people will say, how will you determine that we have benefited from this thing? There are multiple factors. Okay, it's not that just tax has been reduced and we can reduce the final cost of the product. There are multiple other factors which play the role in determining the cost of the product. You cannot punish us. This is what the people, the business people will say, that this is against the business principles. Okay, fair business market principles. They would say. Okay, so these are the certain benefits. Now see, one more point here itself we can add is, now let's say a truck is carrying luggage from Andhra, whatever the goods package is, it is carrying from the Andhra Pradesh to the Telangana. Earlier what used to happen is, when they move towards the interstate boundaries, okay, they used to check all these things. Okay, what is the goods that are being transported, have you paid taxes or here or not, okay, what kind of taxes should be imposed here. So much of checking used to happen. Now simply a e-way bill is generated. Okay, this is now simply e-way bill is generated. Okay, electronically created a bill. Okay, now with this thing, digitally they can just simply show the paper. Okay, digitally in mobile also they can show. Okay, so because of this e-way bill, the movement of the goods from one state to another state, it will fasten up. Okay, because of this thing, again, ease of doing business is increasing. Logistic cost will be reduced. Right, this is also playing a role in decreasing of the logistic cost, which is generally playing a huge effect. Okay, now in order to provide all these infrastructure, a GST network is created. Okay, online digital network is created. So now all this GST has to be paid. Now some MSME people or else small business people came and said, we are already small business people. Now who will do all these kind of GST audit maintaining and all? It is causing problem to us. We are not such a big companies to maintain separate personnel for to maintaining this kind of tax credits, input tax rates and all. Then government said, okay, for you people I will give the GST composition scheme. Okay, GST composition scheme, which means you guys don't have to pay such kind of varied tax rate. Okay, you guys pay simply some flat rate of, let's assume 5%. You people will not get any kind of input tax credit. You pay some low amount of tax but flat tax rate. Okay, for the people up to 1.5 crores of turnover. Okay, the GST composition scheme is allowed. So this is a kind of scheme which is very simple in nature, very easy in nature. They don't have to go so much of taxes. Generally in those A, B, C which we have seen, okay, this supply chain which we have seen, this is very long. Right, so sometimes what happens is, here it would be 10%, here it would be 27%, or else here it would be 5%, 15%. So much of the difference would be there, and so much of the paperwork would be there. So government said, okay, so why all this thing? You just go for the GST composition scheme. It will help. Now then, okay. Problem of MSME resolved, right? Then the people of different state governments said, okay, no, we are not going to agree. We are going to lose considerable amount of money with this taxes. We have to lose the sales tax and many taxes we have to lose out. So we are not going to get benefited from this. No, we don't want to go forward with this GST. State governments have said. Okay, then government has created a constitutional body. Okay, they have created a GST council where central government and state governments come together and discuss, okay, what should be better approach should be followed, what can be the better mechanisms, what could be better tax rates, what all products can be included. In this way they will discuss. Now in this GST council, the central government promised to the state government, okay, so you people are afraid to bring the GST. Okay, what we will do is, let's do one thing. So let's take 2017 as a kind of base year. From here every year 14% revenue growth we will consider, and if any state government is falling short of this revenue of 14% till 2022, we will compensate to the state governments. That is called GST compensation scheme. Now for this, government has levied some kind of taxes on the sin goods. Okay, so what is the base year 2017, and revenue growth of every 14% every year. This should happen up to the 2022 for 5 years, right? So this is called the GST compensation will be given to the different state governments. Now these 5 years are over. Few state governments have asked for a few more years, but recently economic survey, even we have discussed in the Andhra budget, the GST, the share of GST, the highest of entire revenues. So GST is playing very good role. Initially government has struggled, or else people have been struggled because of the GST. Suddenly introducing of the GST, that year if you have seen, GDP has gone down, demand has come down because of the some kind of sudden taxation reforms. But now these things are giving slowly it is giving the good benefits. Okay, so this is the GST to address the state government. GST compensation is being provided, and also GST council has been created. Then state government said no, still for us alcohol, excise, these are very important to us. The excise that we impose on the petrol and petroleum products, aviation turbine fuel, and also taxes we impose on the electricity, real estate, these are highly revenue generating to us. No, we don't want to bring the GST. Said. Then central government said okay, let's keep few items out of the GST. Because of this thing, certain list of items, let's say alcohol, your electricity, real estate, petroleum products, these have been kept out of GST because these are highly income generating to the state governments. Okay, so this problem is also resolved. Then came the poor people and vulnerable section. What is this government? You are imposing heavy taxation. Now you will impose the uniform taxes. Now we will eat small kind of food products. Now if you impose the equal tax on the food products also, on the laptop also, on the Apple also, on the eating Apple also, MacBook Apple also, same tax, this is not going to work. Okay, so some people came and said to the government. Then government said, okay, let's maintain different tax slabs, and different tax slabs will have the different tax rates. Okay, we will divide the products which is based on the luxury goods, essential goods, sin goods. Okay, based on that we will have different types of the tax rates: 5%, 0%, 15%, and the maximum is the 27%. Like this, government has kept the different tax slabs. Okay, this is your GST. And there is also one more issue that is called as a invert duty structure. Now what is this inverted duty structure? Now let's say this is a supply chain from the same previous example. Here there is 10% tax, and here is also 10% tax. Okay, now here there is a 5% tax. Now if you see this, if you see here, now through input tax credit, he will be receiving 20 rupees, but he will pay to the government only 5% tax, that is a 15 rupees. So 5 rupees additional he has to get from the government. Generally what happens is the people will pay more tax and input tax credit will be less. So from that only government will deduct and give it to them. So if this condition is there, this will become difficult only for few people, few sections. This flow of money from government to the particular sector, for this to happen, it becomes very difficult. And this is called as inverse duty structure. You might have heard these things in the news. So this invert duty structure is creating the problem, and government is also creating the way forward in this. Now if you have seen the economic survey of the India, the GST collections of the last year is 18 lakh crore. Okay, there are more doubling of the registrations are happening. More number of companies have been doubled. Tax revenues have been increased. So this is how the performance of the GST is increasing. So now the concept is clear. Now understanding that question becomes very simple. Now see, very simple question. Features of the destination based features of the GST, destination based tax, value added tax, two components, CGST, IGST, SGST, then IGST, input tax credit, GST council, multiple tax slabs, GST composition scheme, GST and zero rated. Exports are not taxed. Okay, 5%, 10%, whatever we have seen, it is kept at 0%. It is not taxed. We should not say it is not taxed. We should say it is zero rated. Inverted duty structure, GST composition, compensation, anti-profiting authority, all these things we have seen already, right? Through conceptual understanding we have understood. Okay, now so doubling of performance, doubling of this thing happened. Okay, revenue increase for the state governments, formalized economy. This is also WTO complaint. Because of this e-way bills, your logistics cost is coming down. But the issues, something still anti-profiting authority, inverted duty structure, all these things I have already discussed. GST reforms should also be complemented. This is indirect tax reform. Now we have to complement it with the direct tax reforms to increase the tax buoyancy and also to increase the tax to GDP of the India. I hope the concept is clear. Thank you.